Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by James Meyler. James is the CEO of Orix Aviation. He's joining us for the purpose of our Aviation Leaders Report for 2025, and we're recording this in our Dublin studio in mid-November. James, thanks as always for joining us. And before we get into the meat of the conversation, do you want to tell our watchers a little bit about Orix Aviation?
Sure. Well, first of all, Joe, thank you for having us. Great to be back KPMG studio. I think in what I might even call precedent times rather than unprecedented times we've been facing for the last few years. So it's great to be back. Orix Aviation, we're a kind of top 10, top 12 aircraft lessor. We've 230 aircraft in our fleet, 100 staff primarily based in Dublin and in Dubai. We're 100% subsidiary of Orix Corporation, the Japanese conglomerate who have listed on the Tokyo and New York Stock Exchange. We also own a 30% stake in Avalon, which I'm also on the board of directors of Avalon. Orix Aviation is the longest aircraft leasing company in existence with the same shareholder. We started almost 35 years ago, and we've been 100% subsidiary of Orix Corporation all through that period.
Great stuff, James. And maybe then if we start on customer performance, can you talk to us about what you're seeing from the demand environment perspective and just how that's breaking out in the various geographies you operate?
Sure. I think as I said there, but it's kind of a precedent year. It really was a more normal year where you had ebbs and flows of supply and demand. I think we'd said before the US market had outperformed during COVID. That probably suffered a little bit this year in terms of oversupply because a lot of the aircraft that were destined for other parts of the world during COVID, as we know, ended up being delivered to the US. Bit of oversupply in that market, which kind of was a softening. So in terms of profitability, I think overall global profits probably end up somewhere in around the high 20 billions like last year. We've seen the legacy carriers in the US outperform profitability-wise, and then the LCCs obviously struggle in terms of higher costs, but also maybe a little bit of oversupply and kind of weakening of demand domestically in terms of the low-cost market. The rest of the world, Europe, pretty much business as usual. Good numbers out of all the low-cost carriers, cost base affecting people, a little bit more difficult to pass on higher yield, but generally a strong positive year. And Asia, I think, has seen the big recovery in travel per se, where basically most of the markets are back to kind of pre-COVID levels or above. So I would just say it was a pretty normal year, basically, which we've been missing for a while.
Yeah, it's nice to be talking about, I guess, the usual concerns. And some of those you touched on there is just maybe are there slight elements of a sagging in demand or the operational cost increases that airlines are facing? As you look out into 25, are you more or less concerned about kind of customer performance than you would have been at the start of this year?
I think there's so many ebbs and flows, which is normal, where you have big kind of geopolitical issues weighing on certain markets. You also have swings in oil prices. So 1 minute you kind of think oil prices are heading higher. Now maybe they might head lower as US increases production. The US dollar strengthening is going to be good for the US market, but not so good for a lot of the emerging markets. Generally speaking, the global economy seemed to be performing pretty well. Interest rates being cut generally should mean that the kind of the demand side is there. And as we know very well, the supply side of aircraft has obviously been inhibited. So if all of the aircraft that had been destined to deliver during COVID, the 3,500 aircraft that haven't been made, had delivered, arguably we could be in an oversupply situation. I think with that lack of deliveries and a healthy enough global market, I think I'd say, interest rates on that slightly on the high side, heading down, some kind of, recession-y concerns. I think the cost base is clearly one of the biggest factors, both labor, maintenance and the like, that are going to potentially have issues on some carriers. But then equally, those who are dollar denominated are in a very, very strong position. So I think we're going to be back to that normal kind of, some are going to do better from this than others. And there may be a shift back towards the LCC benefit if the global economy starts slowing a bit, then customers shift from the full service carriers back to the LCC. So there's just going to be a bit of a rejig potentially, but I don't see anything kind of particularly worrying this year versus when we sat here this time last year.
And maybe to pull on that supply piece for a moment, as you say, I mean, that forced discipline on the airlines, which is interesting from a capacity piece. But over the medium term, how concerned are you or where we are from an OEM or an engine perspective on the supply environment? And just how is that factoring into your business planning?
Yeah, I mean, again, it has various effects where the growth models of, especially the very big lessors, the top 5, even top 10, they're very much reliant on the order books for their growth. Always would mix a little bit of trading, a little bit of sell and leasebacks, but primarily driven by the order books. They then traded into the market to asset manage their fleet, to manage exposures, and that was the kind of the normal cadence of the industry pre-COVID, essentially. One of the kind of unusual effects of these delays has been that kind of pullback from the level of trading until probably this year. And that's a benefit we've seen, is that the big lessors, the top 3 or 4 certainly, have sold a lot more aircraft this year, even though they haven't been getting the deliveries. I think they've kind of taken the view that they need to continue that asset management cadence and wait until the deliveries come back on stream rather than continue to pause. So that's been a kind of an unintended consequence up till this year. I think what we've seen then has been the market for for the delivery of aircraft. It's taken airlines a while to kind of realize how long the delay, or to accept, I think. And I think when we've talked for the last couple of years, I forecast 27, 28 and beyond for before the market normalizes in terms of deliveries. That for sure is now probably 29, maybe even 30. For the last year or two, lessors generally understood that. And I think, but many airlines believed that they'd be back in cadence with the manufacturers by 25, 26. They've now come to the realization that isn't going to happen. And therefore, they've kind of accepted essentially that they need to fleet plan for longer with the aircraft they have. And now that they're doing that, it's kind of kicked into the extension cycle, but the extensions being longer than they might have been historically.
And that was a piece I did want to pick up with you. So can you talk to me maybe a little bit more on that extension piece? So how early now are airlines engaging to hold on to the metal they have? And just what is that driving from a lease rate perspective? Obviously, constrained supply, increased demand, and we might come to interest rates in a second, but presumably we're seeing lease rates materially rise. Yeah,
they certainly have risen materially over the last couple of years. Again, they were possibly artificially low during COVID because of the lack of the demand. So it wasn't necessarily an economic adjusted lease rate based off interest rates and the purchase price of the plane. It was driven off a supply demand dynamic. Now we're back into that kind of more normal world where you're based off your delivery price and the interest rates, the lease rates are back kind of above, let's say, $400,000 a month for the Maxes and the Neos. And what we're seeing is that that's kind of good for the new deliveries, but the older aircraft that maybe would have been extended for far less several years ago are now being extended at higher rates where they probably should be based on the value of the aircraft. But that ultimately airlines had hoped possibly that they would be having, the choice of new technology and therefore would phase out their existing NGs or COs. Now, in reality, they're kind of seeing that to keep those aircraft, the idea of a 2 or 3 year extension might be what they want, but ultimately if a lessor is going to leave the plane there rather than move it to an alternative, they need the kind of 5, 6 to 8 year leases that basically would be what's available if they moved it from one airline to the other. So there's been this kind of shift in longer extensions for when they're done, but also, especially with wide bodies, because of the delays in the supply chain, everything from seats to engine slots to overhaul work, pretty much it's a 2 year window that you need to know what you're doing with the plane, whether it's coming out or staying in. It's at least 2 years on the wide body, and it's probably getting close to that even now on the narrow bodies. So I think people are now talking in late 24, early 25, they're already talking about their 2027, even 2028 delivery expiries, because they know if they don't, the lessor really has to be agreeing a new deal. If they're going to move it to a new customer, you need to know 2 years out to be able to get your seats and your slots. So that's what's happening. And then airlines are being forced to make those decisions with, to be fair to them, some uncertainty still about their own manufactured delivery slots.
So you're talking about engagement there, 24, even 36 months before leases expire. How does that compare to where we were 4 or 5 years ago?
Yeah, I mean, I think in an ideal world, I think the rule of thumb would have been kind of 9 to 12 months for an narrow body, and maybe 12 to 18 months for a wide body would be kind of typically where people were having those discussions. Now it's shifted out, as I say, kind of 18 to 24 months narrow body and 24 to 30 plus months really on the wide bodies.
And you mentioned the trading environment there, and I know we would have spoken a year ago, it was a pretty stodgy, slow environment. You mentioned signs of life coming back. Comparing what you see in the market now to, again, maybe 2019, how do they stack up each other from an activity perspective?
Yeah, I think we're probably getting pretty close to it. The trading market, I think in 2019 was something in the region of 800 aircraft kind of in the secondary market. Where we're heading at the moment, I think if things stay on track for 2024, we're going to be in and around those numbers, which is great. I think, as I say, you've seen in the public statements of the likes of Avalon and ALC and also AerCap that they have been selling significantly more aircraft this year than in previous years. Also, I think you've seen the return of the ABS transactions, and also indeed airlines themselves are definitely buying back more aircraft at the end of leases rather than either paying maintenance compensation, putting them through the shop, or essentially having the risk of the aircraft being taken back and put somewhere else. So we're seeing a lot of airlines trading aircraft now as well.
And from an Orix perspective, you guys have always been a very active trader. Who are you buying and selling from and to?
Yeah, I think it's shifted and it continuously kind of ebbs and flows. We're definitely seeing more sale and leasebacks come into the market. Again, airlines have large order books. Typically, while the bank market had been very kind of cost effective for lending when interest rates were low, and a lot of airlines were either using their own cash resources or funding in the EETC market or in the bond market. Now, as interest rates have gone up significantly higher, we're seeing more lessors come to the sale and leaseback channel. So that's one big increase we've seen in the last couple of years for us, is we're getting more aircraft through that sale and leaseback channel. Then in terms of the buying aircraft, again, typically we've been big trading partners of the large lessors. Orix is able to buy large portfolios, commit with our own resources, cash buyer, take down a large portfolio with very low execution risk. So that's really one of Orix's strengths, is to be that trading partner of the large lessors. And then when we're selling, we do tend to sell kind of in smaller packages, even ones and twos. Also the Japanese market. So for us, the JAL market is certainly a big part of our business. But outside of the JAL market, we're selling, like this year, I think we're going to sell something in the region of 60 aircraft, and we're going to buy 50 to 60 aircraft. But of the 60 we sell, probably maybe 50% JAL market, 50% traditional market. And the traditional market buyers have the usual PE buyers, asset managers, but actually also what we've seen is the top 5 lessors are actually in the secondary market buying now, which comes to my earlier point really about the lack of the order book. So in reality, one of their big channels is to go back in and buy from other lessors. So that's something we hadn't seen for a while, us selling to the bigger top 5 lessors, whereas we're seeing that happen now.
And to pick on that JAL market piece for a moment, can you talk to us? It's obviously been a very long-standing market, a very resilient market, probably one that more and more asset managers are attracted to. Can you talk to us? Have you seen that market evolve? It's generally been one where you've got a great name behind you, which I'm sure is very helpful in that market. But can you talk to us about the competition you might be seeing in that space? And 2, are we seeing any appetite from Japanese investors to branch beyond maybe that tier 1 kind of airline credit piece?
I think obviously it's a specialist market to some degree, because a lot of it is the relationship between the asset manager, the arranger, and an investor. There's 2 kind of distinct markets. There's the multi-investor, where many parties, even thousands of people, often come involved in owning a small slice. And then there's the single investor side. Obviously, we focus very much on the single investor side. So you're dealing with one company, one party. That relationship then obviously is even more important between the companies. And typically for our business, most of our clients will have at least one plane, if not more, that they've done several deals with us over a span of 20 plus years. We've been through all sorts of cycles. We've looked after successfully all the investments. So there's a long-term kind of relationship and proof of concept from Orix in managing those assets. over pre-COVID, we had people kind of branching out into what may be deemed riskier credits, which unfortunately didn't end that well for several of them. And I think that kind of pulled people back to the focus on the tier one credits. And while there's some investors who are in reality large lessors of their own with multiple dozens of aircraft or plus, they are willing to take various risks because they have an expertise themselves. But in general, the people who are doing it once or twice probably rightly stick to a narrow body aircraft with a blue chip credit. And Orix is really the kind of preeminent partner in that. While there is competition, again, it's really, we have all the aircraft on our balance sheet. We've bought them ourselves. We can sell them to them and we can manage them. And we've been through cycles where we can look after them in good and bad times. A lot of arrangers are trying to, broker transactions, buy from someone and manage it back to back. It's a different concept. So I think really for us, it's more having the right product is the key rather than actually competition. And we have such a large fleet with blue chip customers. Over 80% of our owned asset balance sheet are new technology aircraft. So we really have what they want essentially, and that gives us a very good position.
Yeah, in a market where kind of trust and track record are obviously absolutely key. Can we maybe move on to the liability side of the balance sheet, James? Can you talk to me about your assessment of the overall health of the aviation debt market? And that's really bringing it across its various tranches, whether it's through traditional banks, whether it's the unsecured market, which via Aviation you'd see pretty closely, and maybe the alternative lenders as well.
Yeah, I would say generally, I think it's very healthy. You've got, I think, approximately 90 billion of funding was needed this year in the market that was, fully available. You saw Boeing going to the market looking for 24 billion of new capital, new equity and debt. That was also relatively achievable despite the challenges. So I think the depth is there. The bond issuances of all the big lessors have been, the spreads have tightened, there's been large oversubscription. We've seen new entrants from the likes of the Sukuk market. We've seen a lot of new Middle East and Asian banks join club deals, get involved in it. So I think what we're seeing is that kind of the more traditional side of things certainly is very both healthy, and there's a lot of participants and new participants. I think we've also obviously seen the PE-backed, alternative lenders, which I think have been a really healthy addition to the industry because they've taken on a space that was more difficult for banks to do the large banks to do themselves. And while they certainly tried and did do it for both relationship reasons and for opportunity, I think they're more comfortable doing kind of what they're doing, and actually having the PE-backed and insurance company-backed alternative lenders has been a great addition to the market, especially in a period where the ABS market was kind of not really existent for the last 4 years until recently. I think if that PE-backed alternative market wasn't there was going to be a big gap, but it was filled very successfully by those lenders. And obviously now I think we're seeing the ABS market several issuances already. I think it could be as high as 6 to 8 billion by the time the calendar year ends, which I think from a standing start of people wondering would it come back is a very, very big success story. And I do think that over the next couple of years the ABS market will continue to kind of roar back essentially, and there'll be a lot more issuances. So overall, the traditional banks are active and hungry. The bond market's wide open and has been, I suppose, really seen the testing times of COVID and how successful the large lessors were in managing that, prove the kind of the model of lessors being different to airlines. And I think that's really emboldened the bond market to realize that backing the lessor in the unsecured market is actually a very good way of diversifying your risk and get a good return.
Yeah, and that probably feeds into my question on maybe the equity investment side and what we're seeing there. Because building on one of the points you made there, what we've seen is kind of, you look at this in two ways. One, you can say that, Russia and COVID had an outsized impact on the aviation finance sector, but the flip side is the resilience that shone through and the ability of large leasing groups to continue to drive returns to their shareholders in that environment. Do you think aviation finance is more, less, or about the same from an attraction point of view to investors versus maybe 2019?
That's an interesting question. Obviously, you've got different factors. I think The resilience point has been very beneficial, and I think it really has proven there's a big difference between, as I say, either single aircraft investment or airline investment, that if you have the diversified model of a lessor, that makes a lot of sense. I think where there's probably been the challenges as interest rates rose rapidly, and the US 10-year Treasury rate was touching 5%, you had this relative value question about, well, if I can earn that on my dollars and sitting with the 10-year Treasury rate, are you earning enough from the kind of operational risk and remarketing risk and residual risk for doing an aircraft? And I think that became a question for certain types of investors, that basically the risk-free rate was so kind of attractive for a period that it kind of made them question possibly the aviation investments. But I think as we saw interest rates fall rapidly again, then all of a sudden, again, people realized, okay, aircraft is a very long-term asset, that you've got an income stream for pretty much the 25-year life of it, which you just can't get in the risk-free market or in the treasury rates. And you can't kind of have that continuous decent return, basically, of high single digit, low double digits, pretty much for the life of your deal, year in, year out, with proven resilience of values. And we've also seen like the volatility over all of these crises since the last 30 years, where aircraft have maybe dropped 25% at the low point and gone up 25% at the high point. It's a relatively stable versus the stock market, versus shipping investments, versus property and commercial retail investments. No, not many other large capital assets actually have that stability in between the kind of the low and the high. So there really is a consistency to aircraft values that has been proven out through huge kind of challenges, from going back to the first Gulf War, 9/11, financial crisis, and COVID, all to have those kind of challenges and tests of the market values prove that they bounce back, and also that they stay within that pretty narrow band, which is attractive to long-term investors.
More, less, same? What do you have?
I think we're heading into more. Yeah. I think there was a bit of less last year too. I think we're heading into more.
Yeah. And maybe looking at the macro leasing environment, we would have had this conversation over the last couple of years. We've been this natural trend where the percentages ticked upwards, and we were probably touching mid to high 50s in relation to what lessors are funding out of their own book or sale and lease back. Trend line, you think will still continue to tick upwards, or are we topping out on that kind of mid 50s?
Yeah, I think I had predicted that it would continue to go up towards the 60s. And I think I've made the comment before that the largest hotel groups don't own their hotels. They're operational experts. I think that in some degree airlines should be the same, that they don't need to own any of their aircraft assets and they can be operational experts. However, I think what the reality is, what we're seeing is more airlines are kind of keen to continue to have the optionality of a 50-50 fleet. And while they are, a lot of the large order book airlines are using potentially sale and leaseback channels, which spikes the lease rates. They're typically either returning them at the end of the lease, or they're actually potentially buying them back, and it's just a finance form. So I think realistically, you're going to see, and also the order book to lessors, as you know, has kind of diminished through COVID, and also the manufacturers making decisions around trying to lease to lessors who have very large companies who can kind of really have I think they want more aircraft with less lessors basically going forward, which I think then will automatically mean maybe the manufacturer side is doing 25-30% deliveries to the lessor channel. And realistically, you're probably only getting another 25-30% in the sale and leaseback channel. So I think the natural kind of evolution of the order book stream is going to limit the kind of the growth to probably that 55%, and it'll ebb and flow between probably 45 and 55 over the decades. But I'd be less kind of optimistic now that it's going to continue to rise and be the kind of the majority of the fleet. I think it's going to stay in that 50% range.
Yeah, and an interesting point in relation to that order book kind of contraction as to who the OEMs are interacting with would kind of again posit around the importance of scale. And you stand back and look at this sector, one thought we've had put to us as part of the discussions, well, really, where are we heading? Are we heading to a world in 5 or 10 years' time where we've 5, 6, 7, 8 super lessors and everyone else kind of playing in a niche? What do you take for something like that?
Yeah, I think whether it's 5 or whether it's 10, I think you're going to have probably closer to 10 super lessors. And I think they're going to have the bulk of the order book. They're going to be all 1,000 plus aircraft at that stage. But I think whether there's kind of as many niche players or not, a lot of it actually is going to be driven probably by the engine side, in the sense that a lot of the engine manufacturers now are moving into kind of a different model where they're kind of the total care agreements and a lifetime program for maintenance, which makes it more difficult to be just a one-time investor in one aircraft or a one-time trader of one engine or small lessor, essentially. I think that's going to be the big evolutionary shift. And if that continues, you're going to need a large fleet to be able to kind of get the value from your OEM relationships, OEM credits, and the like around these maintenance and support programs. Whereas if you're in the older days, essentially, you could just be a one-time owner. I think that's the way things are heading. I think that's going to be the kind of the market that gets kind of swept away as the industry evolves.
Can you build out on just that point for me for a minute, so I get a full understanding? So I guess the point there being that around maintenance, you had the opportunity, depending on the structuring of a transaction, to make some lucrative returns. That's going to be less likely in a future environment, we're saying.
Well, it's not even that. I mean, ultimately, it's not even about lucrative returns. You've got an aircraft, you give an aircraft to an airline new or an engine, they use the life of that and they pay you for that life. As the cost escalates, you get paid for that life as it escalates. In the past, where a lot of businesses focused was that they could monetize those either maintenance reserves or return compensation, and at the end of the lease, they could essentially either choose to reinvest that money into a new overhaul, or they could keep that money and sell the engine in an as-is condition. That's kind of how a lot of the industry operated for many, many years. What we are starting to see much more is what has happened in wide bodies for a long time, in wide body engines, where there's a lifetime kind of care agreement that is a tripartite, usually between the airline, the lessor, and the manufacturer. What we will see, and we are seeing now in the narrow body side, is a similar program, which instead of kind of having a payment at the end of the lease for an engine, you may now be heading into a situation where it's a lifetime. Over the engine's lifetime, you can get, if when it goes in for work, you get the benefit of that work, but it's more difficult to monetize the value of your asset that you own. So it's not even about a kind of a lucrative exit. It's actually you getting your money back that you bought for your new engine.
Yeah, so just squeezing returns as much as anything.
Yeah, or just making it a kind of more illiquid, essentially.
Yeah. And that piece, again, looking at the market, if we say there's going to be 10 super lessors and then people playing in niches, that would imply more consolidation. The consolidation we've seen is probably around that 100 to 150 aircraft lessor that maybe is not of that scale. Is that the trend line you expect to continue?
Yeah, I think that's kind of the normal course of business, that will definitely continue. I do think that there will be likely some of the larger scale consolidation. A lot of the lessors want to grow. A lot of shareholders want to be bigger. Eventually, there's kind of going to be probably a meeting of minds of shareholders to have combined entities, giving them a better bargaining power, better economies of scale. So I think my guess, certainly as the next couple of years go through, is that there's going to be that consolidation that's going to drive these big 10 lessors being kind of all, as I say, all kind of certainly 600-700 aircraft plus by the end of the decade would be my guess. The top 10 will all be 700 plus, basically.
Yeah. And maybe shifting gears just to touch on something around the environmental concerns side. This is probably an area that I'd say I had more interesting conversations with people 2 or 3 years ago, but it's the same conversation we're kind of continually having, where it's, we think eventually might impact on your ability to attract debt or investors, but not yet. And as a lessor, what can we do other than fund newer aircraft? Anything new do you think we have to say on that ESG type agenda?
Well, it's kind of a case of you've got to practice what you preach, and you've got to, kind of operate in an environment that you want to be into the future. And certainly that's what we do. As I say, over 80% of our own balance sheet are new tech aircraft. So essentially, I think that's the number one position of all the lessors, and that's essentially investing in the most fuel efficient and environmentally friendly aircraft that are available. Equally, as a company and certainly as Orix, to do your part kind of in the wider sense as well as what we've also been doing. We're involved in SAF research programs, but also Orix Corporation, for example. I think just even yesterday, Eloan, which is our sister company, is a Spanish renewables business. It already produces, I think, more than enough solar energy to power Ireland twice. So it's 66 gigawatts of solar energy this company produces. It's 100% Orix owned business. Ireland, for example, produces 6 kilowatts. And actually yesterday they agreed a deal with ESA in Spain to buy that hydroelectric business, where they've now taken on essentially 23 hydroelectric power stations through Spain as well. So basically, like, an Orix sister company of ours is now, with this, will now be kind of more than able to power the country of Ireland 4 times over from our own investment in renewables, just in Spain, in Europe, and then across our other wider renewables business in Asia. It's one of the largest parts of Orix Corporation's business, and Orix Corporation really sees kind of the next growth period of the business being focused in kind of 3 main areas, driven by obviously the domestic Japanese business, but the kind of the global asset management business, the renewables business, and the aircraft leasing business. There's kind of 3 big focuses outside of Japan, and they're all intertwined where we can do our best in the aviation space of new technologies. We're also, again, Orix Corporation owns the 3 airports around Kansai Airport and are working with Airbus at the moment about essentially the hydrogen facilities are being invested in those airports to be able to do the first hydrogen flights, essentially, that are coming in the next decade. But certainly the infrastructure work is actually already undergoing with Orix and Airbus and partners. So those are real tangible steps that we can do around, obviously, SAF, hydrogen, and then essentially investing in other renewables that are going to help the environment and buying the best aircraft. Eventually, there will be new products available in aviation that are new engines and new aircraft types, but they're many years away still. So for now, yes, you have to do something, and we do exactly what we can, which is kind of buying those aircraft and investing in renewable space.
Yeah, no, and like I say, a very balanced scorecard. When you look at the overall corporation, how they're coming at things. In closing, James, and I always like to ask this question, as we sit here near the end of 24, looking out into 25, what are your optimism levels like?
I would say high. Now, they've been tested in the past with black swan events and the like, but as I say, I would hope this time around, it looks like we're heading into a global environment that, while there are clearly geopolitical tensions, there are also a lot of growth factors that kind of should start to come into play in terms of the increase of the decrease of interest rates, hopefully coming over a number of time, together with the kind of the lack of production that's still there, which really means that you've got the demand is going to continue to be there, as we've seen, and now you've got less aircraft available. So certainly for the next couple of years, I think it's a good time to be a lessor. I think it's going to be a good time to be funding into the next couple of years as well. And all in all, basically, I think we're kind of probably deservedly, after a tough couple of years for COVID, are heading into a good couple of years as the leasing industry.
Great. Well, on that hopeful note, James, thank you as always on behalf of KPMG and Airline Economics for your time and insights. And I wish you and Orix Aviation a very successful 2025.
Thank you. Thanks, Joe.